Hey guys, Nick McPhillips here from Highview Accounting Financial. Back to you guys with an update or a new thing about JobKeeper Extension. Obviously, this time I don't have my pretty background of the Highview logos everywhere because us accountants are considered non-essential. So we are all working from home and trying our best to get back to as many clients as possible with all the queries surrounding these government subsidies. So, JobKeeper Extension. Basically, we know that it has been extended, and it will be extended through two phases. The first JobKeeper finishes at the 28th of September, so in 6 days, or whenever you're viewing this, in a few days' time. And then effectively what will happen is they do have an extension in two phases. Phase 1 being October to December, Phase 2 being January to March. Basically, what we do know is there are some further eligibility requirements, and there is some changes to the payment rate. So that does affect what you're currently doing and whether you're still going to be eligible for these extensions. But basically, what we do know is if you are currently enrolled, you do not need to enroll again with the ATO. That will still roll over in the current system. So what do we need to check? We need to look at the eligibility requirements. Now, this is where it's changed fairly dramatically in a few different areas. And basically, we now have to assess you on a quarterly basis. No longer can you choose which month your 30% decline, being a small business, has hit. There are still the other rates, 30%, the 15% rate. But what we'll look at is we're going to solely use the 30% because I believe my audience will be primarily that area. So we need to assess that we've had a 30% decline. That hasn't changed, but we now have to look at the quarterly basis. Now, what that basically means is we have to look at what your sales or GST turnover, the terminology is, for the quarter of July to September 2020 versus July to September 2019. If you can show that you've had a 30% decline and you've been affected in your business by 30% or more, then you will still be eligible. Now, further changes to this is you must assess your turnover calculations based on the same method that you are registered for GST. So if you report your BAS on a cash basis, which is when you physically get paid by your customers, then effectively you have to look at your turnover on a cash basis. What have you been paid between July to September 2020 versus July to September 2019? Similarly, if you are on a non-cash or accrual method, which is basically when you invoice, you then have to assess it on that basis as well. So the basis of that you report your GST on your business activity statement each quarter or month, depending on how often your reporting requirement is the basis of method that you have to use when assessing your turnover calculation. The other thing that we do know is we must use actuals. No longer can you use projections. So you cannot say now, we're midway through September, I project my sales for the July to September to be X and compare that to my 19. You have to wait till the end, see what your sales are, use the actual sales in that particular area, in that particular quarter, and then assess on that. So primarily we need to use the GST registered basis and also look at your actual sales in that period. Effectively what that means is probably 99% of people, that will be your total sales less the GST you've received in that period, or when you do your BAS, the labels are G1 total sales minus 1A GST on sales. Whatever that comes to, compare that to the same quarter the year before, being July to September 2019. If you've had a 30% decline, that's effectively how the ATO are going to assess whether or not you have hit that decline and whether or not they are going to follow you up with some compliance activity if you have not and you're still trying to claim. So it's pretty black and white, as you can see here. Now, there are still a few little abnormalities, I suppose. What happens if you're not registered for GST? Well, if you're not registered for GST, you still have to use that quarterly basis. You still have to determine what your turnover for that quarter is and what your turnover for the quarter the year before was. Again, the quarter being July to September for this phase. And basically what you get to do, though, is you'll get to choose either cash or non-cash being accrual and get to use whichever method that you feel best represents your business. The one thing you do have to keep in mind is you have to use that same method for both your calculations for each year. Obviously, you can't use cash for the 2020 year and accrual for 2019 year because you're not comparing the same thing. That being said, we do understand that sometimes this may not be you know, the best in terms of you might be in a business and someone might be paying you from 3 or 4 months ago that's owed you money for a while, and you're on a cash basis for GST, so that has to be included. But realistically, you don't have any sales, so you are actually affected. Unfortunately, the rules are the rules though, and we can't actually make any adjustments for that purpose. It is simply, if you are on a cash basis, what have you received in that quarter? So now that we know that this has been really tightened up and made effectively black and white, we will sort of have to wait until the September's end to determine what your sales actually are for that quarter and then assess. But basically, as I said earlier, it is pretty straight and clear cut, black and white. It sort of is what it is. There's no sort of determination either way as to projection or anything like that. It is on your actuals, your GST basis, and it's simply comparing July to September 2020 versus July to September 2019. That's for phase one anyway. I'm really focusing on phase one in this video. I'm not focusing on phase two, which is the January to March quarter. Basically, if you do get access to it in the first quarter, we're looking at July to September, which gives you the ability to get into the system, the extension system phase one, which is October to December. That ticks that box. And then we need to reassess again at the end of December to see obviously whether you're eligible for phase two, with phase two simply being the same sort of premise of the calculation, but instead of comparing July to September, you're comparing October to December. That's a while away. We'll leave that alone for the time being. We'll just keep looking at the first phase being the October to December quarter, which you have to use your turnover calculation or calculate your turnover for July to September. All right, so that's the turnover and the eligibility requirements. So we know that's going to be a little bit harder to tick off, and we will have to look at that and assess on those bases, and we'll do that basically when you complete your BAS. So it's really important if you are a client that normally gets us to prepare your BAS and you want to see if you're eligible for that period, that you get your documentation and everything you need in normally for your BAS to us as soon as you can, obviously after the 30th of September, and we'll endeavour, obviously there'll be a high volume, so we will be under the pump a little bit, but we will endeavour to do it as best and as quickly as possible to make sure that we can see whether you're eligible or not for you. The next thing to look at is the payment rates. So the payment rates are changing. Previously, the current JobKeeper system, effectively the payment rate was a flat rate of $1,500 per fortnight, $750 a week, whatever it may, however you look at it, but effectively $1,500 a fortnight, whether you work 2 hours, whether you work 40 hours, or anywhere in between. Effectively, that has now changed, and the payment rates will now go into 2 tiers. So once we've established that you may be entitled and you've ticked off the box that your July to September has decreased by the 30% in the calculations that we're looking at right now, then effectively we then have to look at each eligible employee and each eligible business participant. Now, the criteria for those two areas hasn't really changed, the eligibility requirements, except now we have to assess what tier they fit in, whether it's a tier 1 or a tier 2. Now, before I go into what the payment rates are for each tier, I'm going to look at how we determine which tier that they fall into. So what you have to do is you have to look at each individual employee in isolation, and you have to look at the hours that they've worked in the 4 weeks prior to the 1st of March 2020 or the 1st of July 2020. Now, effectively looking back, if you're on a weekly basis, you get those 4 pay slips, you have a look how many hours they've worked, calculate that up. Now, if they've worked over 80 hours, which is an average of 20 hours per week, doesn't have to be exactly 20 hours per week though, it could be 30 one week, 15 the next, and and then another 30 and 15. And effectively, their average is over the 20 hours. Effectively, what that means is they would be a tier 1. Now, a tier 1 is someone who works more than 80 hours in that 4-week period, and they are entitled to $1,200 per fortnight for the first phase of the JobKeeper extension. The second, or anyone that hasn't worked more than 80 hours or more, I should say, falls into tier 2. And for the first phase of the JobKeeper extension, tier 2 payment rate is $750 per fortnight. So that's probably likely to be some of your part-time workers that will see basically if they were currently getting JobKeeper at the $1,500 per fortnight, it will half. So they will go down to $750 per fortnight. Or might be a bit more depending on how many hours they're working and what their payment rate is. But effectively, the minimum wage requirement is and the subsidy reimbursement is $750 per fortnight for those working less than 80 hours in that 4-week period prior to March or the 1st of July. So how do we go about telling the ATO who's a tier 1 and who's a tier 2? This is done in your single touch payroll software STP enabled software, I should say. So for instance, if you're using a Xero, MyOver, QuickBooks, there will be some more detail coming out from those software developers, and I believe there's some that's already come out but probably hasn't gone live just yet. Basically what that will entail is similarly to where you have probably enrolled them or told the ATO that they will be on your JobKeeper, you will be claiming JobKeeper for them. You will have to distinguish which tier they fall into and lodge another pay run, the next pay run, and that'll effectively let the ATO know which tier which each employee comes. Once we get some more information from each payroll or software provider, we will try and post it and send that out to you. But effectively, that's the general crust of it. Now, you don't necessarily need to, or there's no requirement for you to get them to sign forms for the extension again if they've already signed nomination forms. They stay the same. That doesn't change. But effectively, what we do need you to do, if you are eligible, is we do need to notify the ATO whether they're a tier 1 or a tier 2, so the ATO can categorise that and determine how much your subsidy is for each particular month. Once we've done that, effectively, you've ticked off all the boxes with the ATO. You've ticked off that you're eligible. You've ticked off that the payment rates in the tiering system for each of the employees. You will still have to lodge monthly declarations. So the monthly declarations, just like the normal JobKeeper, that'll continue, and that'll prompt the ATO to pay the specified amount based on the number of eligible staff and business participants you have in each tier. You obviously have to declare your turnover for each month, just like we have been doing, so nothing changes on that part. So that's a little bit of an update of what we know about the JobKeeper eligibility for and requirements for the first phase of the extension. We do ask you to be patient with us. I know there's probably a lot more questions and a lot more unique situations that we are getting more and more information on by the day on, and we hope to be able to address those with all of our clients as and when we sort of can. As I said, we do ask you to be patient as we are obviously working remotely, and we do have high volumes of contact with our clients at the moment with everything going on. So the best way, as I said, the best way to contact is probably by emailing your accountant directly because of the remote situation, and they'll get back to you as soon as they can. But as I said, hope you all stay safe, stay well. Hopefully we're on the back end of this stage 4 lockdown, and we come out the other side stronger than ever. All right, thanks guys.